your source for profit. Hear what you need to know to succeed in today's real estate market.
Every single day, you got to learn something. I hope today I can help you learn something. In case you don't know, my name is Barry Cunningham. I'm a real estate investor here in South Florida. Been in the game for about 25 plus years, 1,000 plus transactions been involved with on the closing side. And now I'm getting into the development part of South Florida as well in the opportunity zone. Did a lot of video about that a couple of days ago. So yesterday, if you joined me yesterday, I talked about the Broward County single family home market report that came out. And I told you today I was going to do Miami-Dade, and then tomorrow on Thursday, I'm going to do Palm Beach. So you're going to have a ton of stuff that hopefully you can learn today. But I just want to warn you, today's video is not going to be like yesterday. Yesterday I went on for an hour explaining every single part of the report and detailing that when you look at this report here, that there's so many different parts of it that you have to know what you're looking at. And so I'm not going to spend all that time doing that today. I'm basically going to go over some raw numbers, and I'll spend a little bit of time talking about what those raw numbers mean. But I encourage you to go back and look at the Broward County market report. It's about, actually, if you go look at the live video, it's the full hour. But if you want to do it in bites, I broke it down into 3 or 4 different videos that you can watch for like 14, 15 minutes at a time. And that way you don't have to sit there and watch the entire hour. I know I can bloviate quite well. I spend a lot of time talking. But this has become fun for me, and I'm really serious about it. So let's talk about yesterday very quickly. So I showed you the reports. This was the Broward report, and it goes through a lot of information in terms of sales year over year, information year over year, comparing it from July 2019 to July 2020. And I want you to go back and you go ahead and take a look. And today I'll refer back and forth from a comparative viewpoint so you can see how Broward is comparing to Miami-Dade. So let's just jump into this as soon as we can here. So I'm going to talk about, and let me switch over. This is the Miami-Dade report. And hopefully you can see it. There I am. I'm going to move it up so you can see. Okay, let's jump in. So July 2020, there were 1,194 sales in Miami-Dade County, closed sales, down from 1,270 the year before. And both those numbers, and I'll switch over to Broward real quick, are quite less than what Broward's been doing. So obviously, Miami-Dade got hit harder. Actually, the epicenter of the coronavirus here in South Florida. So I would expect that their numbers are going to be a bit off. I'm not saying that it's any less of a market. The only caveats I want to make sure, if I look to do anything in Miami-Dade, is to know which markets are the ones to take a swing at. So obviously it's going to require, as I mentioned yesterday, doing some due diligence right down to the subdivision zip code areas to make sure that you're not going to get into a property that's going to have a problem moving. So let's just get into this. 1,194 closed sales, 186 of them were paid in cash. And I explained yesterday, paid in cash is foreign investment, people moving from New York, investors like myself buying these properties. I like that number, 186 closed cash sales. Broward had 244, so they're not too far off, but there is a little bit of suppression in the Miami-Dade market. Median sales price of $410 down in Dade, whereas median sale price in Broward is $400. So we can look at both those numbers. Average sale price. So this is something that's just wow. Average sale price of a home in Miami-Dade is $678. $678,000 is the average sale price in Miami-Dade, and the average sale price in Broward was $511, almost $170,000 more just because it's in day. So even with the suppressed market, the higher end stuff has got to be seen as moving. It's definitely moving up. So median time to contract, 46 days. I explained that. Let me see, make sure you guys can see. Median time to sale, new pending sales. Now, interesting, I'm jumping straight down here. Straight down. So we can see that in 2019, it was an average of 6 months supply of inventory in the Dade County market. Now it's at 4.3. Now, when you look at Broward, it's 4.2 and 3.1. 3.1. So Miami-Dade is a little bit slower and probably a little bit more advantageous for some investors to get into. It's creeping up into a buyer's market. Once you start seeing the 4s, the 4.1s, the 4.2s, that tells me, we're inching towards a buyer's market. But with Dade, you got to be careful because all of these numbers can be completely skewed because of the coronavirus. I mean, it was hit hard, as you guys know, if you're anywhere near South Florida. If Miami-Dade was hit hard with the lockdowns and things of that nature, and probably scared the bejeebus out of so many people. Closed sales year to date 6,700, and so looking at the monthly sales, I like to look at where were things beforehand. So if you go back a year, it's 1,200, so we're right about where it was last year. Not much of a difference. 1,270 in July 2019, 1,194. Not that much difference. It's only 6% off. So they got hurt, obviously, when the corona hit in February and January, which ordinarily would be strong times because that's when people are coming down here. But, that's people didn't come. And so the market got completely hurt. So you guys can see those numbers. Still not concerning, but I do want to pay attention to this. I do want to pay attention to the supply of inventory on the market. If you remember yesterday, I spoke of something called the absorption rate. And the absorption rate, is based upon how many homes are in inventory and how long would it take to sell those homes based upon the current rate of sale. So right now, based upon the current rate of sale in Miami-Dade, it would take 4.3 months to sell all the property. Now, I'm going to go into that as I did yesterday. What that really means is understanding, one, that zip code by zip code, subdivision by subdivision. If you're looking at, these are all single family, so I'm not even going to talk about the condos. But you have to make sure that this supply of inventory, where it is now, isn't because of the coronavirus. But I'm also, as I did yesterday, I'm going to tell you how that number is going to be influenced tremendously. So let's get back into it. So we're going to go down here, and we're going to look at cash sales. And one of the things I looked at yesterday when I was talking about the cash sales was where were the months when the cash sales were rising, and looks like, and this is here's a real point of interest for me. July last year was 233. It dove down to 179 in November. January and February, it still is at 190, 178, even as the corona hit. March, corona's in full force. Lockdowns are happening. We're still at 187. So it doesn't seem as though the cash sales have been really negatively influenced by the market, which is pretty good and is substantiated by there being so much inventory. If there's 4.3 months of inventory, there are going to be a lot of anxious sellers, especially as that starts to creep up. If that starts to creep up, and we're going to look at a chart here, you're going to see some deals hit the market in Miami-Dade County. So let's continue. Cash sales as a percentage of the market. So before I put my head up here we go. All right. So in September and October, as well as in January and February, cash sales represented about 20% of the sales in the market. Now it's only 15.6% of the sales of the market. So the cash sales, it's fluctuating a little bit, and that is because, in my mind, what I see and what I look for is the absorption rate. Investors, people moving from other areas, foreigners coming through. Things fluctuate according to, it's almost like a stock market. It very much is like a stock market. So down we go. Median sales price, it's been, last year this time was 372. This year this time it's 410. So the prices are going up even though there's more inventory. That is not jiving with the laws of supply and demand. Usually if there's more supply, the price comes down. If there's less supply, the price goes up. So how are we seeing a price go up even though there's more inventory? Think about that. Why is the price going up at the same time we're seeing more inventory? I'll show you. So average sale price went from 634,000. Let you see that in July of 2019, dropped precipitously to 498 in August of 2019, and then it's been on a pretty much rise since then. I mean, we're talking, here's January at 531, 515, 582, 587, and then went from 545 to 678 in 2 months. Boom. That spells boom. So the prices are rising. But you need to know why. So we're going to go down further. And dollar volume, I don't really pay attention to. And then I get down to here. This is one of those figures that just drives me crazy. And I'll spend a little bit of time, even though I talked about it yesterday, when they say the median percent of original list price received. And it's showing forever 95, 96. Just so you guys know, it will always show 95, 96. I'd be surprised if you found anything but 95, 96, 97. Realtors make sure that it's going to show 96, 97 plus of list price. You know why? It's because if a house is for sale at 400,000 and it doesn't sell for 6 months, so the listing gets canceled and maybe another realtor gets it, or the realtor then terminates the listing and then relist the same property and they drop it to 330 or 340 and it sells at 325, 328. It appears as though it's sold for 90+% of the list price. It doesn't talk about the list price from before that they dropped it. So you can manipulate these numbers. So I don't pay any attention to list price for what I do. Maybe with what you do, but not what I do. Same thing with this one. This thing here, median time to contract. What the house has been for sale since January of 2019, and they've chased the market down, and they keep lowering the price, and they keep making sure that the price goes down and down and down and down. And then again, the same thing. They relist it, and then it sells in 30 days. Did it sell in 30 days, or did it sell in 180 days? Remember, it's been for sale since January. So once there's a little trick you can do in the MLS, which basically resets these numbers. And when you reset these numbers, you get numbers like this that say, we're closing in 40, 50 days, which I don't find reliable. I like to get in, have my real estate agent dig up how long the property has been listed in its entirety. Not the new listing, not since the price drop. When did they start selling this property and how far have they been chasing the market down? That's what I want. So let's see one more down here. Medium time to sale, same thing. New pending sales. Now this is an interesting number as well. So in July of 2019, there were 1,367, 1,279 in August, January 1,335. And then in June, things really started pending. People were buying. Pending, don't know if they closed, and then 1692 in last month. So there's some activity coming back. Hopefully that people are seeing what's going on, and they're writing contracts. Great. This is a good one. So if we know unequivocally as we're looking at this that absorption rate is going up, and we're talking about a 4.3 month absorption rate, meaning more inventory is coming on the market. In order for that to be happening, there has to be more properties coming onto the market. So as you can see here, July had 1,563 properties, single-family homes hit the market. 100 plus more than the previous month, after already having a huge month of 500 plus from May to April. So more houses are obviously being listed. So just take a drink. And then down here, active listing. In July, there are 4,400, last month, 4,400 active listings, down from a really big high of almost 6,500 in July of last year. So it's dropped quite a bit. And this is something what I want you to look at and just understand. Why did it drop? Why are there only 4,400 homes that have just been listed? You have to think. And I'm going to tie this in the same way I tied it in like yesterday. Different market, same stuff. So, yeah, again, you have to be looking at all the data. And this doesn't break it down to subdivision and zip code, which you're going to want to do on something you're going to buy. Let's go down. All right, so this is where you start looking at the monthly absorption rate. And you can see some different things here real quick. So in July of 2019, as we knew, the absorption rate, months of supply, was 6 months. Now it's down to 4.3, which is the lowest month in a year. In a year. Even at 4.3, which is borderline buyer's market, it's still the lowest it's been in 12 months. Take a look at the chart. What jumps off the chart to you? What are you looking at that should be jumping off the chart with you? Is that 6.0, 6 months was the months of supply a year ago. And it pretty much hovered around 6 until January. You can see that, yeah. And then it hovered around 5.4, 5.6. Then it dropped in June. And then it dropped in July. Even though it's high, even though that absorption rate for me is kind of high, it's telling me something. And this is, not the first time I looked at this, but just looking at this for the first time, it would jump off the page at me. Why is it that Miami had a 6 month supply of houses and it's dropped down to 4.3 right now? This is when you start looking. I did this yesterday just so people could get a kick out of it. This is when we start having that crystal ball effect. This is when we start seeing, hey man, there's something going on here that you need to dig into. These numbers are telling me that the inventory, while declining, is still almost into a buyer's market. So do you think it's going to continue to decline and go back into a seller's market? Or is there going to be an influx of inventory that's going to push it back up above 6, maybe 7, maybe 8? Think about that. I want you to be able to understand that inventory as a factor of what's on the market right now is going to be different than what's on the market coming real soon. A lot of people aren't looking at this. A lot of people aren't understanding either that or they're just ignoring it and they don't want to know what's coming. But you as an investor, you as a buyer, need to know that if there's 4.3 months of inventory right now, if it dropped down to 3.5, sellers are really going to command the market. But if it goes up above 6, you're going to have sellers wanting to do deals very quickly. And I'm going to tell you why the inventory potentially, now I'm going to remove that. I'm going to tell you the inventory is going to go up real quick, real soon when we get back.
Your source for profit. Hear what you need to know to succeed in today's real estate market.
Hey, thanks for checking out this clip of the Barry Cunningham Show. Every weekday, Monday through Friday, I talk about real estate and the trends and news that affect real estate and making money in real estate. So if you want to see us live, just go ahead and click the subscribe button below, or just click the link below, which is going to be a link to the archives of all of our live shows. And then we'll go ahead and cut these up and get them out there so you can see the clips of the various shows. But in any event, I'm glad you're watching. Please continue to watch and have a great day. Get out there and make some money. And we'll see you on the next episode.